Everyone's talking about Fannie Mae dropping their 620 minimum credit score rule, but here's the truth. It's not the game changer they're making it out to be. And in this video, I'm going to explain exactly why. Stick around until the end because I'd also share a few niche scenarios where this might actually help certain borrowers. But for most people, it's not the industry shift the headlines are hyping up. I'm Joe Nelson with the Nelson Home Group, 21-year retired Air Force veteran and loan originator, and I'm here to keep you informed about what this really means. So let's start with the basics. Fannie Mae is one of the two big government-backed agencies that keeps mortgage money moving. They don't lend money directly, they buy loans from lenders, bundle them, and sell them to investors. That's how banks and lenders free up cash for more loans. Now, Fannie Mae uses an automated underwriting system called desktop underwriting, or DU. Think of DU as the algorithm that analyzes your loan file. It looks at your credit, debt, income, assets, job history, down payment, and overall risk, and it spits out a recommendation, approve or deny. Up until now, DU had a hard rule. If your credit score was under 620, automatic rejection. Well, starting November 16th, that's changing. DU will now look at the whole picture instead of just the score, meaning someone with a lower score but stronger income or bigger down payment might still get approved on a conventional loan. The problem is this only applies to conventional loans, and here's the thing, people with credit scores in the mid and even upper 600s have already been able to qualify for conventional loans, but many of them still choose FHA or VA instead. It's because FHA loans tends to offer much better interest rates for borrowers in that credit range, and FHA's mortgage insurance premium, or MIP, is fixed. It doesn't change based on your credit score, while conventional PMI can get pretty ugly if your credit score isn't great. So even if you could go conventional, FHA often just makes more sense when you compare the total monthly payment. Now, FHA's been allowing lower scores for years. You can go down to 580 with 3.5% down, and we close plenty of loans like that. Technically, you can go all the way down to 500 with a 10% down, though not many people at that credit level have 10% cash ready to go for a down payment. So while this Fannie Mae update sounds fresh, FHA has been living in this world for a long time. Even if you qualify for a conventional loan with a lower score, the math often still favors FHA. The interest rate is lower, the insurance cost is steady, and the monthly payment usually wins. But here's the part no one talks about: FHA's upfront funding fee. It's 1.75% of your loan amount, and it gets added to your loan balance, which means that even though you're putting 3.5% down, your starting equity is basically cut in half. On a $300,000 house, 3.5% down is $10,500, but that 1.75% fee adds another $5,250 right back on top. So when you move in, you really have about 1.75% equity in your new home. That's why, for people who plan to sell or refinance in a few years, skipping that funding fee and going conventional, even at a slightly higher rate, could make more sense. Those are the niche cases where this Fannie Mae change might help. We're talking about buyers in the low 600s with strong compensating factors, solid income, low debt, or a healthy down payment. And honestly, I believe most of those borrowers will still choose FHA anyway, but only time will tell. For veterans, this doesn't really change anything. The VA loan has never had a minimum credit score, and it's still the best deal out there. 0 down, no PMI, and great rates. The only time a veteran might go conventional is if they got a 0 disability rating and a large down payment to eliminate PMI. Otherwise, VA still reigns supreme. So the big takeaway is this: Fannie Mae's update is interesting, but it's not revolutionary. DU just got a little smarter, but for most people under 680, FHA will still be the better fit. For veterans, VA stays on top. The real key is working with someone who will show you the numbers side by side, conventional FHA and VA, so you can see what actually makes sense for your family. If you want that kind of straight talk, call or text me, we'll run it together. And in my next video, we're going to talk about something that might actually shake things up: 50-year mortgages. Stay tuned, and we'll see you next time.